Thursday, March 7th, about 9:15 p.m. Central Time. I want to jump on here and do a trade recap video and focus the topic on time frames, specifically the 1 minute versus 2 minute versus 5 minute time frames for trading and basing your entries and exits, but not in a general sense, in a real specific sense, because in this case today, had I been trading on the 5 minute, I coulda, shoulda, woulda made a lot of money today on Meta call options, but instead I took a 70-cent loss on the contracts because I was focused on the 2 minute. Now I used to trade on the 1 minute, and a lot of you still do, and I get it. You know, when you're trading on the higher time frames, you can miss some opportunities. But this is a real example of, if you're not going to trade on the 5 minute, you should at least have it on your screen in a split screen, or be looking at it before you bail on a trade, because you could be getting faked out early. And if you just let things slow down a little bit, you could let a good trade make you some money. And so today I had the right idea, I had the right thesis, so I can feel good about that, I guess, knowing that I was on the right track, but I don't have the green to show for it, which ultimately that's why we're doing this. So here we are at the open. I have some lines drawn. I like to draw the pre-market high and pre-market low in blue, and I bold them. I just like blue for pre-market, and the prior day high and prior day low are in gray. 5 minute chart, you look at this. What a strong day. Wow, Meta was bullish all day long. It held the VWAP all day long. It did sell off in the afternoon, but what a morning run all the way to lunchtime. How could someone who goes long on Meta, whether it's the stock or the options, lose money? I mean, how is it possible? And this is one of the things traders need to understand, is that it's helpful to look back on charts. That's how you learn. And I look at charts all day long. You should be just consuming these things. You should be printing them out. You should be putting them all over your office. You should be reading them to your kids at night. I mean, you should just be consuming charts and going back and revisiting your trades. But it is one thing to see the strength. It's another thing to actually stay in there and not get faked out. So on a 5 minute basis, it looks very clean. This is the candle of doom. So I went long on the opening range break. 5 minute had already settled, so we're in that second 5 minute candle, and we broke strong with strong volume above the PMH, pre-market high, and I'm feeling good. I'm making some money. The contracts are moving. It is Thursday today. I did not buy tomorrow's expiration. I normally would, but I just wanted a little less volatility. I don't know what it was. So I ended up buying the March 15th. So it's a week from tomorrow. But anyway, you can see here that, yes, it was a strong red candle, but it still held structurally. We did not break down and close below pre-market high, nor did we break down and close below the 9 EMA. And that's my mental stop to exit a trade on these ORBs, is when you close below either the VWAP or the 9 EMA. And we didn't on the 5 minute, but on the 2 minute, we did. So on a 2 minute basis, this red candle closes below VWAP, below the 9 EMA, and I am out. I'm feeling bad about the loss, but I'm feeling good that I followed my rule. But had I just been on a slightly higher time frame or glanced at the 5 minute before I hit the sell button, I'd have still been in the trade. And I'd have been in the trade all the way until here. Now, it did break kind of midway through this bull run, but it then reclaimed the 9 EMA. And after it reclaimed the 9 EMA, we had 5 green candles in a row, and we go up to 519. But I mean, to lose on this is beyond frustrating. It's one thing when you're wrong. You're just dead wrong. You have the wrong idea. The market moves against you. The stock moves against you. You take your loss. You have a reasonable stop. All right. You live to fight another day. It's entirely another thing when you were right, and yet you have nothing to show for it. And it was entirely because I am so focused on the lower time frame. And had I just stayed with it, I'd have been in the trade. Now, the downside of trading on the 5 minute, or at least using it as a confirmation guide, is that you are going to have to endure more pain, because it's 5 minutes. And if you're actually going to wait for 5 minute candle to close below your key level, maybe that's VWAP, maybe that's 9 EMA. For me, it's the 9 EMA. It tends to work well for me. Then you're going to have to deal with larger unrealized losses potentially than you would if you're quicker to pull the trigger because you're on that lower time frame. So Trading a lower time frame, you're going to get into more opportunities because they can present themselves more quickly, even if they are really unsubstantiated on the 5 minute or 15 minute. But you're also going to be exiting plays that are in play. There was no breakdown of market structure. There was nothing wrong with this trade, but this wick on a very bullish candle stopped me out. So I'm going into tomorrow, and I'm going to be focused more on the 5 minute in conjunction with the 2 minute. I'm going to let them work together, let that confirmation happen between two different time frames. And I'm going to leave the 1 minute behind. You can have it if that's your thing. All the power to you. But I think the 2 minute, 5 minute split for me fits my personality a little bit better. And my whole goal is to get emotion out of this as much as I possibly can. We're only human. But I think the lower time frames has me a little more emotional and has me giving up too early on what was a very good trade on one of the Mag 7 or 6 or 5 or 3, or are we down to 2 now? I don't know what we're down to, but Meta's magnificent and had a very strong day. So that's it. Speaking of magnificent, NVDA, everybody loves it. Everybody loves it. Look at this thing. Look at this thing, 940. I don't know when you're going to see this video, so maybe by the time, whoever you are, you get to this thing's at 1900 as opposed to 9. And I hope maybe another discussion of the videos. I don't know whether to trade this thing, like day trade this thing, or swing trade this thing. I'm not going to scalp this thing. This thing is way too volatile and violent to be scalping options on this. For me, I can day trade options if I'm at the right time frame, as we just discussed. But I mean, I'm so bullish on the stock. It's way extended technically now, so I'm scared to add to it. You see 22 here. This is just my long ongoing swing trade position. I sold a bunch of 800 like an idiot. But I don't know, am I an idiot for taking profits? At some point, you got to take something off the table. But if this thing's going to 1,000, it's not even April yet. You got to take some along the way. So I don't know, me thinking out loud, I don't know whether to trade it or just be an investor. Maybe both. I'll probably just hold some in the IRA and then continue to trade it and have peace of mind that, because it moves. I mean, I think yesterday NVIDIA from high a day to low a day intraday was an 18-point move or 20-point move, something like that. On a large cap stock in the hottest sector, the hottest company in the hottest sector of the market is moving this much intraday. It is impossible not to take trades on it. I mean, for me to not take day trades on this, I'd have to shut the computer and like go for a walk because I'm just way too tempted, even though I want to hold, even though this seems perhaps ripe for a pullback. But people have been saying that at 500, and then they were saying it at 600 and 700 and 800, and we'll be triple digits soon. So it's breathtaking and awe-inspiring, and I'll leave it at that. Hope you guys had a good day in the markets, and we'll see you tomorrow. Bye.